Students, in our previous video, we discussed illustration 8 of ICA study material Rohit. In this video, we are discussing illustration 9 belonging to Nidhi traders. So let us jump into the transactions and try to analyze so that we can pass journal entries. So transaction 1, first one, when Nidhi sells goods for 50,000 rupees plus CGST and SGST, it is simple, where the GST is calculated on the base value because it is not inclusive, isn't it? So 50,000 on that 6% is 3,000, straight calculation. So CGST 3,000, SGST 3,000. So total cash received is 56,000. So the journal entry here is cash account debit 56,000, to sales account 50,000, to CGST account 3,000, to SGST account 3,000. So CGST here and SGST here are output CGST and SGST. So cash, since it is an asset increasing, we have to debit. Sales is an revenue increasing, we have to credit. And output CGST and SGST are like liability increasing, we have to credit. So moving on to the next transaction, wherein goods sold to Surjit for 28,000 rupees, including CGST and SGST of 6% each. Students, do not get panic when you see this inclusive tag. So when the value is including tax, it is including the price plus tax. So suppose the 28,000 is actually representing 112. Because 100 plus 12 is 112, so 28,000 is representing 112. So for 112 it is 28,000, for 100 it is how much? So when you calculate like this, the sales value you will get 25,000. So the journal entry will be Surjit account debit 28,000, to sales account 25,000, to output CGST and SGST 1,500 each. So calculator doing magic tricks here. So you have to be very good at calculating these taxes when the question says it is inclusive of tax. So please be careful and mindful while solving these kind of problems. Moving on to the next journal entry, where we received 25,200 rupees from Surjit in full settlement of his account of 28,000. So here, when it is the term full settlement is used, we are getting only the 25,200 portion here. So balance 2,800 will become discount. The three accounts involved here is cash account, discount allowed account, and Surjit account. So cash being an asset increasing debit, discount allowed being an expense increasing debit, Surjit account, since we are receiving the payment and the asset is coming down, Surjit being an asset, debtor decreasing, we have to credit 28,000. So it is in full settlement, 28,000 he is settling, where we are getting only 25,200, the balance will become a discount allowed. Moving on to the next transaction, where sold goods to Kapil for 30,000 rupees, charge IGST at 12%, where we received 12,000 immediately, and balance to be received after 1 month. So in this case, is a cross-border transactions, where in the interstate transaction where IGST is applicable. So the sales value is 30,000 and IGST is 3,600. That is 12% on 30,000, because this 30,000 will not include GST. So it is exclusive of tax. So we have to calculate separately 30,000 on that 12% we apply 3,600. So the total value including tax is 33,600. So the journal entry will be cash account debit 12,000 because we are receiving immediately, and Kapil account we have to debit the balance 21,600. So to sales account 30,000 and to IGST account 3600. So here we have to calculate the sale value and GST 30 plus 3600, 33,600, out of which he is paying 12,000 and balance will become a asset as debtors. So moving on to the next transaction, wherein Kapil was allowed a rebate of 5,000 rupees as goods supplied to him were defective. These goods were sold by charging IGST at 12%. So in this case, this is basically similar to sales return kind of thing. When the sales return happens, no, we have to reverse the sales by debiting the sales return account. As I mentioned earlier, so whenever the sales return happens, we have to reverse the amount as well as the GST part also. So in this case, the IGST comes to around 536 rupees. So the sales return part is 4,464. So sales return account debit 4,464, IGST account debit 536, to Kapil account 5,000 rupees. So here, we have to calculate the 5,000 rupees as inclusive here. So 4,464 as sales return and 536 rupees as IGST. Moving on to the next transaction, wherein the sold goods to Manpreet for 12%, 1 lakh rupees at trade discount of 20% and charged IGST. So the list price here is 1 lakh rupees. The trade discount comes to 20,000 rupees because 20%, and the net sale value is 80,000. So on that, if we charge 12% IGST, being an interstate transaction, it comes to around 9,600. So 12% of 80,000 is 9,600. So the journal entry will be Manpreet account debit 89,600, to sales account 80,000 and to IGST account 9,600. So Manpreet account being an asset, debtor which is increasing, we have to debit. Sales being a revenue which is increasing, we have to credit, and IGST is an output tax which is a liability, we have to credit. So this is how we have to pass journal entries for output GST when there is an interstate transaction. And that's a wrap on Nidhi Traders Chronicles. So remember, every transaction tells a story and you are the narrator writing the journal entries. So keep practicing, keep laughing, keep learning, and keep those debits and credits balancing. So if you like the video, please like and share and subscribe our channel Lator Academy, and do not forget to